Imagine handing a highly advanced AI the keys to a financial market.
Yeah, and it analyzes the charts perfectly, right?
Exactly. It predicts the trends, executes the trades, and, well, it still ends the day losing money. Welcome to today's deep dive. We're unpacking a test log from May 29, 2026, where 3 parallel MT5 LLM bots did exactly that.
Right, and just for context, MT5 refers to MetaTrader 5, which is basically a standard execution terminal.
Yeah, and these specific bots are driven by large language models making the decisions.
Exactly. And the combined scoreboard for the day was a loss of, well, -109 Japanese yen, which, I mean, sounds like a failure.
It really does. But looking at the data, this log is actually an absolute masterclass in system development. It's kind of like a sports team dropping a completely meaningless preseason game.
Well, right, because you don't really care about the scoreboard then.
Exactly. You just care about the practice tape showing exactly where your defense is weak.
Yeah.
So our mission today is to figure out why this very specific controlled financial loss gave the developers the exact tape they needed to optimize their system.
Well, to extract the value from that tape, we sort of need to look at what a safe loss actually looks like mechanically, like with GateGrid AI.
Right, that was the one trading the British pound against the US dollar.
Yeah, it recognized a bad entry and just killed its short position at -37 yen. It basically failed fast.
Which is huge for a grid-style strategy, right?
Yeah.
I mean, my understanding is that a grid bot places a net of buy and sell orders at regular intervals to catch natural market swings.
Yeah, that's the basic idea.
But if a strong trend breaks out against you, couldn't that net just, completely drag your account underwater?
It absolutely could. That is the existential threat for a grid bot, a runaway sequence, where it just keeps averaging down into a losing position until the whole account is wiped out.
Oh, wow. So the LLM here didn't blindly follow that grid logic.
Exactly. It analyzed the market momentum, realized the setup was toxic, and just amputated the position. So taking that -37 yen is actually the system working perfectly.
Okay, so that's failing by design. But looking at BoundSniper on the USDJPY pair, I saw a totally different kind of failure.
Yeah, BoundSniper is such an interesting case.
Right, because it correctly predicted the market direction, and it technically made 19 yen on the actual price movement.
But it finished the day at a measly +2 yen.
Wait, so BoundSniper was completely right about the market direction, but still basically lost its edge just because of holding costs?
Basically, yeah. I mean, the logs specifically point to swap costs. The bid-ask spread is just the cost of opening the door.
But swap is the cost of staying inside.
Exactly. It's the interest rate differential between two currencies. So when you hold a position overnight, the broker either pays you or charges you based on those rates.
I didn't realize overnight fees could just neutralize a perfectly accurate market prediction like that.
Yeah. BoundSniper nailed the spatial dimension, the price target, but it completely ignored the temporal dimension. The market was actively penalizing it for holding that specific asset over time.
It's like paying for a parking meter that eats up all the money you just made at your gig because you stayed 3 hours too long.
That is a perfect way to put it.
And those hidden holding costs actually cascaded into the third strategy, right? LLM bridge trader on the Euro-USD pair.
Yeah, that bot started its day deep in the red just from carryover swap costs alone.
And here's where it gets really interesting. Instead of just taking the hit or panicking, the LLM actively tried to dig itself out of the hole.
Which is where the architecture of an LLM-driven bot really separates itself from traditional algorithmic trading.
Right, because a standard rule-based bot would either freeze because its risk parameters were violated, or just blindly fire its next scheduled trade.
Exactly. But this AI recognized the deficit. It analyzed the current market volatility and determined a new, highly leveraged long position could offset the carryover loss.
And it actually executed a counter move for a 126 yen profit.
Yeah, ending the day down 74 yen total. I mean, it didn't fully recover, but the mechanism is what matters here. We are seeing real-time, dynamic drawdown recovery.
So the AI reasoned through its own failure state and attempted to engineer a bridge back to profitability.
Yes, but it also highlights a massive blind spot. AI position planning works for recovery, but the initial carryover risk demands much tighter constraints in the prompt engineering.
Right, so the AI is smart enough to fight back, but it's still getting tripped up by the mundane reality of overnight fees. It really reframes the whole concept of a bad day in the
It
market.
really does. A good trading bot isn't judged by its daily scoreboard.
Exactly. It's judged by how it loses, how it limits damage, and whether its logs expose exactly what needs improving next.
Setbacks like this are just the price of admission for robust optimization. The developers paid 109 yen to find out exactly where their AI's logic breaks down.
It really is the perfect practice tape. Which leaves you with something to mull over today. If an AI bot can dynamically learn to adapt and recover from its own early deficits in a volatile financial market,
Just by analyzing a controlled loss, yeah.
right, then what other complex systems in your own life or work could benefit from failing small just to harvest the logs?